Hey guys, I got a good video for you here today. This is in regards to can you deduct your RV loan as a tax write-off? So for anyone thinking of purchasing an RV, whether it's to live full-time on the road, part-time, as a retiree, or as a young person, like everything in life, you need to analyze the financial aspect of the decision because financial freedom and financial information can empower you to live a better life. And the RV lifestyle is centered around living life more on your terms and being in control of your destiny a little bit more. So I want to get into, is your RV loan deductible, tax deductible, and some parameters around it. Now, first, the disclaimer: I'm not an accountant. Tax laws change. You have to do your own research. So this is, take it for what it is, entertainment, but it's somewhat informative. So I did some research. You should do your own. And here's how it starts. So when I researched, I'm looking at my laptop as I made some notes. As I researched, is an RV loan deductible? Here's basically what is kind of said. The IRS says that you can take a home mortgage interest deduction on a qualified home. This means your home, your primary home or your secondary home. That's the key thing. It has to be either your primary residence, your primary home, or your secondary home. It can't be a third home. It can also include, it says, a home includes a house, a condominium, a co-op, a mobile home, a house trailer, a boat, or similar property. And here's the other key: a similar property that has sleeping, cooking, and toilet facilities. So your RV has to have sleeping, cooking, and toilet facilities. You can't just have like a mini travel trailer that you're pulling that doesn't have a kitchen and a full working bathroom. And that's why even some campgrounds don't allow RVs that aren't what they call fully self-contained. To be fully self-contained, you have full hookups, and basically you can shower, eat, and cook in your self-contained unit. You don't need to use shared resources. So that is how, based on my research, that the IRS is defining a home. It could be a house, condominium, co-op, mobile home, house trailer, boat, or similar property that has sleeping, cooking, or toilet facilities. So if your RV has these categories, it says, that make up a home, sleeping, cooking, and toilet facilities, you can deduct your interest paid on your RV loan. Okay. So again, now the only other limitation is if it's your third home. If you have two homes and this is your third thing, your RV, you can't. But that is exciting because it means you get a little bit of benefit if you take out a loan. But here's where it's not exciting. The whole purpose of financial freedom and of running a business is not just to get tax deductions. The whole purpose of running your life and running a business is to get profit, net profit, good cash flow, etc. So you get a little bit of benefit. There's an incentive to get a loan. Loans, create money basically. The bank makes money. The dealership is able to sell more units because more people can buy them, because not too many people have cash to buy an RV. And, more people will have to work on the RV and more campgrounds can operate. So it creates economic stimulus within the economy because it affects a lot of jobs and a lot of growth. And that's why the government incentivizes loans. And there's nothing wrong with debt as a blanket statement, but debt is very dangerous and it should be avoided in many, many instances. So, but in some instances, I'm not going to say it's 100% bad, okay? And you should be informed enough to know what benefits it can serve you to get a loan on an RV. So you don't have to have a business to get a tax deduction on your RV loan, as long as it's your primary or secondary quote-unquote home. Now, if you have a business, if you have a YouTube channel that's monetized, or if you do a blog, or if you do something related to camping, and you can justify your RV as a business expense, then you'll get different tax write-offs, whether it's depreciation or the mileage that you use, etc. Again, you'll have to consult your tax accountant so you can get a little bit more benefit. with more deductions, okay? But again, the goal of everything in life is to get net profit, not necessarily deductions, but it's a little bit of a game. But again, be informed. Let's just go on a little bit more to talk about the deductions. It does address here in this one article that I was reading about if you could deduct your van if you lived in a van. So it basically says for all the van lifers out there with a portable toilet, that's a tricky decision. If you were to get audited by the IRS, we can't guarantee that that they'd view your portable toilet stashed in your cabinet or under your bed as a legal facility. However, to our knowledge, there hasn't been a tax court case that has basically ruled on this. As always, rules are up to interpretation. So van life, if you were just a regular person with no business, I really don't, I don't think you can deduct the loan on a van if it didn't have a legit toilet facilities. But again, you could roll the dice. And again, if you had a business, a blog, a YouTube channel, maybe you could deduct that in a certain way on depreciation. But definitely what I found viewing campground rules and the legalistic way to really look at it is people want your RV to be fully self-contained, have full hookups so that you don't need to use the campground bathrooms. You don't need to use any other facility. You can stay in your RV and you could live in it and you could dispose of your waste, meaning you have a flushing toilet. You could shower, you have a shower, you could cook, and you could sleep. That means that you don't need to go outside of your RV to fully live as long as you have those hookups. And that's what really self-contained means. And that's the official term of many of how they look at an official RV. But there is tax benefit. You should be informed, especially if you're thinking about getting a loan in your personal life or if you run a business, a blog, a YouTube channel, or whatever. So I want to share that information with you. It's some information you have to do your own research, but it's good to know there's some benefit. Again, a deduction does not mean you get money. It just means you get a level of break on how much taxes you'll owe on any profits. But you can certainly run a business at a loss. But if you continue to run a business or your life at a loss, you don't get ahead. So the whole point of life is to get ahead. I think the whole point of the nomadic movement is to control more of your life and to enjoy more of it. There's no one answer. Everyone has their own way to look at life. I'm sharing this video to spur some stimulus in your mind, to get you excited, but to also caution you to live below your means. Even if you get a loan, you want to live below your means. You want to have a higher income than expenses. You want to look at not just your monthly cash flow, meaning you don't want to just look at the RV payment, because you may get an RV payment that's $200 less than your car payment. But an RV loan is usually 20 years when the average car loan is 5 years. So some travel trailers, they only go up to 10 years. It depends how much the purchase price is. So you're doubling or tripling your length of loan. That's why the monthly payment is less. So you may get more monthly cash flow, but your net worth, meaning how much assets you have versus liabilities, may decrease when you get an expensive RV loan. So you may gain, again, positive net cash flow for a monthly basis, but you may lose net worth on your overall balance sheet. So make a mental note, do your own research, click that thumbs up button if you like this video, share the video, subscribe if you're not, and I appreciate all the love and positive comments. Peace and love.